Good morning. This is Michael Feiner from Feiner Wealth Management. Today is Monday, November 8th, 2020, and welcome to the Feiner Wealth Report post-election. The election occurred last week, and as we mentioned in our previous reports, the market doesn't like uncertainty. And the fact that the presidential election is over now means that the markets can move on and digest all of the information from the elections. As we prognosticated before the election, the stock market did predict that we would probably have a Democratic election because incumbents tend not to be reelected when the stock market does not show great strength before an election. That basically was the outcome of the election. The only thing that probably didn't occur was that there was no landslide on either side of the equation. Many people predicted that there would be a blue wave as a result of poor potential economics. And then certain people predicted a potential red wave based on hidden Trump voters. The unusual outcome of the election was that there really was no real win on either side except at the presidential level. As a result of that, and the thin margins in various electoral states, the stock market took that with great relief, meaning that there would be no substantial change to tax policy or regulatory policy for the upcoming several years. It does appear that there will be President Biden and a Republican-controlled Senate. With that combination, the stock market will tend to produce good results. Other things that are happening in the economy include good news from Pfizer, for example, this morning that they completed phase 3 trials for their vaccine for COVID, and that vaccine had over 90% efficacy, and that provided a great psychological boost and a moral boost to the US economy, to population, and probably to the world. With that, we expect several other catalysts to help work the stock market to a positive result toward the end of the year. That includes other vaccines from other companies. It includes a potential stimulus deal to help those in the US and world economy that are hurting the most. It also includes good news from potential reopening of certain parts of the economy where unemployment, as mentioned last week, has come down, and other pandemic relief that should be catalysts to the economy. So with the certainty of the election now behind us, with potential vaccine relief, with potential stimulus to the economy, we see those as great drivers for the stock market. Of course, there are potential negatives for the stock market, and that includes the second wave of COVID that is certainly going to restrict the expansion of the economy. But all in all, things seem to be tracking in a direction that we would view as very positive for the market and things that we can expect to meet our potential projected outcomes as we've mentioned before. As always, please feel free to give me, Mike Feiner, a call at 978-740-1011 or email me at michael.feiner@feiner.com at any time. Thanks so much, and I look forward to speaking with you soon.